Hey, everybody out there. Welcome to this live episode of that crypto show on a Thursday evening, at least here in Berlin. So good morning, good afternoon, good evening to wherever you are watching this from in the world. My name is Dirk Hartig. I'm the head of trading education here at primexpert.com. I'm also a professional trader with 25 years of experience, and today is going to be a very, very special episode of a live version of that crypto show, because we are actually not going to talk about cryptocurrencies. Today, I want to talk about trading the Forex markets. And I want to show you exactly why I want to talk about the Forex markets and, of course, what's in there for you. So in the next half hour, I want to try to, bring closer to you, of course, a lot of basics when it comes to Forex trading. Of course, I cannot, capture the whole asset class and teach you everything there is to know about Forex. If ever is something like knowing everything about something, I think, at least when it comes to trading, there isn't. But I want to bring it closer to you. So if you consider trading in Forex, that you have a better understanding of what you're really doing there, and where to place your trades, and what also avoid in terms of trading. So let me just quickly add here my screen. Okay, this is my trading account. I'm seeing we have a couple of people watching live here. So welcome. If you are watching this live, of course, as always, you have the opportunity to ask questions related to this live stream. So feel free to just, ask whatever is on your mind. After the end of my presentation, which is probably going to take like 20-25 minutes, maybe today, I'm going to happily answer your questions here. If your live question cannot be answered today, rest assured I'm going to answer it in the comments. If you're watching a recording of this, of course, please feel free to also ask your question here in the comment. Leave us a comment there, and I'm more than happy to answer it. Especially when it comes to trading Forex, foreign exchange, I think there are really no dumb question, because it can be quite a complex asset class. Now, for me, I've been trading probably 4 times as long Forex as I've been trading cryptocurrencies. So by education, actually, I am a Forex trader. Large portfolio of mine still in daily trading is still done in Forex positions, mainly in Forex options. So I'm buying and selling rights to buy and sell currency exchange rates at for a time. But we are not so much going in that today. So my goal really is today to give you a principal understanding of how you can approach this class, because there are some traps that you probably do not have in cryptocurrencies. All right. So before we start, guys, as always, I have to make a little bit of advertisement here. So if you are not yet a trader here at primexpert.com, look in the description of this video. You will find everything you need to sign up for an account. Prime Expertise is also my exchange of choice for many things that I'm trading, just because they have very low trading fees, especially for cryptocurrencies, especially for Forex. They have very good execution. So I'm saying this to you as a trader, not as the head of the trading academy here at primexpert.com. They always have some nice perks also flying around there. So if you for example, open a trading account and you enter the promo code Trading Academy, you can get up to $7,000. It is actually in bonus onto your account that you can trade with. So that's an extra thing of margin. If you enter the promo code The Room, you will get a 50% discount on trading fees. And I think this is especially valuable for you if you are interested in more short-term trading. And Another thing, you should really join also our Academy Telegram channel because of a number of reasons, actually. And the first reason being, I'm posting there really every day about my thoughts on the markets and how I'm positioning myself midterm, long term. Also sharing some of my short-term positions there. We just recently had a trade there in the S&P 500. And more importantly, special promo codes were also that you do not get anywhere else. And next week, we are going to have our very first Trading Academy training contest, which will be exclusively for the subscribers of the Academy Telegram channel. So join it. You will get the code there. You can participate in the trading contest, of course, for free. And you have a chance to win really nice prizes, that can help you to get your trading career kickstarted. All right. Enough advertisement. Maybe allow me this final one. Leave us a like, subscribe to this channel. I think as a YouTuber, you have to say that, right? And let's jump into the action of Forex. Now, we are all eager to trade cryptocurrencies. And let me make this a little bit bigger here so we can see this better. And I think, the interesting stuff about trading cryptocurrencies has been so far always that it probably is the most volatile asset class out there. We are used to not only Bitcoin, especially also in altcoins, but we have moves up like 5-10% per day. Same to the downside, of course. And, that there's always a lot of action. So it's very attractive, especially for beginner traders that want to also adapt a kind of that want to adapt a kind of very frequent trading style. However, recently what we've been seeing now in Bitcoin is that we are moving sideways. So for the last maybe 1 month and a half, really there has been a lot of sideways action. Not really. We've been sometimes above 20,000 up to 23, 24,000. Right now we are a little bit below there. So we are at 19,700 right now again, but not so much action as we are used to. And there have been a lot of voices out there crying like, okay, what can I do in a sideways market like this? And in my opinion, the solution for this really lies on the hand, because cryptocurrencies are only one of the markets out there that you can really trade. There are other markets out there. There are also, and these other markets you can access also with your Prime XBT trading account. And one of those markets is the Forex market, which stands for foreign exchange market. And if we look here, for example, now for cryptocurrencies, how much trading volume is on a daily average generated for cryptocurrencies. And I'm just, it's kind of actually difficult to access these numbers because not every exchange is kind of publishing this number out there. But let's stick here to coin market cap. I think this is a general good resource for when it comes to stats like this. And coin market cap is telling us that we have a 24-hour trading volume of around about 65 billion US dollars. And for me now, the question is 65 billion US dollars in trading volume a lot or not? I mean, if you're watching this live, what do you think? Is 65 billion US dollars daily trading volume, is that a lot or is that not a lot? And I know we have some delay in here, so probably it's going to take some time until your answers come in. So let's look at them later here. Now I'm going to tell you as much as this. In cryptocurrencies, we have those 65 billion of daily volume. In Forex, the foreign exchange market, we have 6.4 trillion US dollars of daily volume. Now that is Mondays to Fridays. I know cryptocurrencies are trading 7 days a week. The Forex markets is trading Mondays to Fridays, but there with a daily volume of 6.4 trillion US dollars. And Now, if usually if I say this number, I say like, okay, 6.4 trillion US dollars. This is the yearly GDP, gross domestic product of Japan. So the whole net worth, so to say, gross worth, the economy of Japan is generating within a year. But I think still this number is kind of hard to digest. That's why I want to actually share another screen here. And I made a very boring Excel file here, but allow me to share this one. And to just show you what that actually means, what this number is, 1 trillion or 6.4 trillion. And for that, let's just start with here. If you have like 1 million US dollar in capital and you are able to generate 1% in interest per year from that, that means you have 10,000 US dollars per year in interest. That means per month you have roughly 833 US dollars in income, per minute 2 cents, per hour $1.16. Now, for a lot of people, of course, this would be already probably an income that is, kind of life-changing, and for a good reason, Of course, in lots of parts of this world, 1 million is not going to make you like insanely rich, but of course, it feels safer to have 1 million in net worth or on your account than it feels, that you have to struggle for. And when you lose your job, you don't know how to survive after maybe 2 or 3 months when your savings are over. Now, let's compare this to $1 billion. Now, we had 1 million. Now, 1 billion. 1 billion is 1,000 million. So instead of the 10,000 interest per year at 1%, you would have 10 million or 833,000 US dollars per month, or $19 per minute, or 1,157 US dollars per hour. Or as cryptocurrency traders, of course, we need to measure our income in Lamborghinis, 3.33 Lamborghinis per month. So there's already this huge difference, between 1 million and 1 billion. If we take things now to the extreme and we have a look at the daily turnover of a Forex market, so 4.6 trillion US dollars. Yeah, I had to check if I really pointed, because there's a lot of zeros, obviously. Now we are at a yearly interest rate, 4.6 trillion of 46 billion US dollars, or 3.8 billion per month, or 88,000 US dollars per minute, or 5.3 million per hour, or every month 15,333 Lamborghinis. So this is really the difference between 1 million and 1 billion already. And I think a lot of people really cannot fathom how large the differences are there. And now you might, of course, ask yourself, like, okay, I mean, this is nice to know, so to say, but why are you telling me this? And I'm telling you this because this is a big argument for investing in Forex. Because of this huge turnover of 4.6 trillion US dollars every day, Monday to Friday, the market is almost impossible to manipulate. I mean, imagine the amount of money you would have to put on the table every day if you want to manipulate currency prices into your direction. It's much easier to do so with cryptocurrencies. And I mean, we've seen that with whales sometimes doing that. At the moment, there's this fear lingering around with the coins coming onto the market. I think it's 150,000 coins from Mt. Gox that is driving prices down in cryptocurrencies. When we talk about traditional Forex, foreign exchange market, this would be a joke. Now, the question, of course, is what are things that are influencing prices? If the market is so big, the question is, why is it so big? And what is influencing the market, and how can I profit off this? And We could talk for hours about this. And today I want to give you kind of some tools in your hand that you can determine like the rough direction where probably currency is going to develop in. And let's have a look here first. And on one of those directions currency is usually developing in is determined by the difference of interest rates. So if we look at here, for example, at euro dollar. So in the background here, I have a euro dollar chart. I hope I have it. Yeah, I have it here. And so you can see how many US dollars do you have to pay for 1 euro. And what you can see here is a downtrend, right? Like we've talked about in other webinars as well, is there's a clear downtrend here that euro dollar is declining. But what does that actually mean economically speaking? That means that a year ago, or more than a year ago, actually here in June 2021, you still had to pay $1.22 for 1 euro. Now you only have to pay 0.9942 US dollar cents per euro. That means the US dollar has gotten stronger. You have to pay less US dollar in order to exchange to 1 euro. And this is really one thing a lot of people do not understand about the Forex markets. It's always about trading pairs. If you would have sold euro US dollar, you shorted euro US dollar, that means you are selling euro and buying US dollar in the hopes that you can buy the US dollar back at a better price because the US dollar has appreciated in value. And this is a bit counterintuitive, right? The chart goes down, but it means like that the second currency has gone up in value. And this might be simple for you, but a lot of people actually struggle with this. And the question, of course, now is here, what is influencing things like this? And one of the major influences of exchange rates between classical currencies, so-called fiat currencies, like the euro, US dollar, British pound, yen, South African rand, Japanese yen, Aussie dollar, New Zealand dollar, or wherever you are sitting in the world, are interest rates. And if we have a look here at the interest rates now, for example, in the EU zone, so the euro area, we see here we have an interest rate on average of 0.5%. In the USA, United States, we have an interest rate of 2.5%. Now, what does that mean? That means if I have US dollars and I invest them in the economy of United States, and I can do so by buying so-called treasury bonds. So I can do so by giving my money to the US government, and in return for that, I'm going to get some interest paid. This is done by a vehicle called treasury bonds. Every country has something like this. And so I'm getting on average 2.5%. If I'm investing in the Eurozone, as we saw just now, I'm only getting 0.5%, right? So as somebody, for example, if you are managing a pension fund, so let's say, for example, you are in Germany and you are the pension fund manager of Volkswagen, super large German company, and you have to manage the pension fund, meaning like you have to make sure that when workers go into retirement, that they still get every month their pension paid out, which they work for their life or for at least a large number of years. And you have a choice now. Should I put this money into European Union bonds for 0.5%? or into US Treasury bonds for 2.5%, while you probably would choose the US Treasury bonds for 2.5%. And this creates, and you are just one of many institutional investors out there making that choice. They see, okay, I can get more interest rate there than I can get in my home country maybe. So I'm going to invest in this area where I can get more secure interest rates. And of course, by all means, it's pretty safe that the US government is going to pay its interest rates. If they don't anymore, we have different problems to talk about. So they are going to, and this creates a demand for the US dollar, because in order to invest, of course, in the US economy, to buy US Treasury bonds, you need to purchase US dollar, and you do so by selling your euro, buying US dollar. And this at a large scale, if this trend if this difference in interest rates is there for a long enough time, this creates so much demand that you'll over time see the price for the US dollar getting stronger. So you have to pay less and less US dollar for euro because the US dollar is getting stronger. It's more attractive to invest in the US economy than it is in the EU economy. Now, this, of course, is on a very shallow level. There are more things that are adding to the equation. Like, are we talking about a so-called first world economy? Are we talking about emerging markets and so on and so forth? Is there a recession? Things like this. But in general, something like this is called a so-called carry trade. So you invest in a currency that has a higher interest rate than the currency you are borrowing. Yeah, I'm selling US dollar, I'm buying euro in this case. And if you stick to this already, before you consider taking a trade, at least a longer term trade in currencies, you have a look at how is the interest rate in the currency I want to buy versus the interest rate in the currency I want to sell. You can, most of the time, at least when you compare economies that are somehow at an eye level, you can see what the trend is. So, and this is actually what I've been doing here since quite a long time. I have not bought euro. I've always sold euro, bought dollar because of this difference in interest rates here. And honestly speaking, I don't see why this shouldn't continue. I don't see why we shouldn't go down to 0.9 or maybe even 0.8. And you can see this trend also with other countries. Like if you compare, for example, here, the euro area with 0.5% interest and Canada, 2.5% interest. So a little bit lower than the United States. You can still see there is this trend also of the Canadian dollar going stronger against the euro. Not as much as we saw in the US dollar, because the US dollar interest rate is higher than the Canadian interest rate, but still. However, there are, of course, also exceptions from this example. And one of those exceptions is, for example, Turkey. So if we look now, how is the interest rate in Turkey? And we see here it's 13%. In Germany, it's already, or in the EU, it's only 0.5%. Wow, great. So I can earn 12.5% if I invest my money in the Turkish lira. And if we look here at the chart, we can see, but that is strange, I have to pay more lira, Turkish lira, per euro than I had to do a year ago. Actually, there were like huge fluctuations here. In the rate here. It went up to all the way to 21 lira per US dollar, and then shortly after it was down to 11 or 12 lira. And the question is here, how come that is the case? And the secret here lies in inflation rates. So if we look, for example, is this Turkey here? Yeah, this is Turkey. If we look, for example, here, the inflation rate in Turkey is 19.6% in 2021, that is. That's not the data for 2022. Now compare this 19.6% to the inflation rate, to the interest of 13% you're getting there. So there's still a gap of 6%, right? And this is why the exchange rate doesn't go down. So the lira becomes more valuable against the euro, but goes up because the interest paid cannot offset the inflation in that country. So that is the second part of it. However, we don't want to go too much into depth today. I think if you can memorize here really and take away that if you want to trade currencies, you might want to, of course, that is if you want to invest longer term, if you're scalping intraday and so on and so forth, that doesn't count for you. But you might want to start off by comparing how is the interest rate of a country I want to buy the currency from in comparison to the interest rate of a country I want to sell the currency from. So remember, if I long euro US dollar, buy euro US dollar, that means I buy euro, sell US dollar. So I'm long, I'm buying 0.5% interest rate. I'm selling 2.5% interest rate, right? By this also doesn't sound like a great deal, right? And then if you compare, so to say, countries that are very, very different in economic development, maybe you want to have a look at inflation rates. How is that country doing in terms of inflation rate? Is it paying such a high interest because the inflation rate is high? Like an example of that is also Argentina. Now we are seeing here Argentina has an interest rate of 69.5%. Wow, great, super nice. You know, I just parked my money there, going to double it in a quite short time frame. Yeah, but the inflation rate is 71%. So actually I'm losing money, you know, and you can of course also see that if you compare the euro to the Argentine peso on a longer time scale, that it has gone up by 38% within a year. All right, good. So let's see if we have some questions out there. Anybody want to know anything about trading currencies? Not everybody is lying flat because it's quite a difficult topic. It can be really, but it's only difficult as everything, you know, it's only difficult in the beginning. Anyway, if you have questions after digesting this webinar, please leave a comment under the YouTube stream. You can also always join our Telegram channel. Really, here you'll find a link for that underneath this live stream. So where I report about things like this, and I break them down also to the point like, okay, this is where I'm investing, this is why I'm extracting money from a certain market, and so on and forth. And yeah, you'll find all the information there really that you need. It's always difficult in the beginning to invest in a new market. I bet you felt the same way when you started trading cryptocurrencies. All right, let's wait a little while because like I said, we always have a bit of delay here. All right, great, good. In that case, guys, I'm going to see you again latest on Monday. Remember, we are going to have our Telegram trading contest, our first Academy trading contest that is going to start next week. I think registration is going to start next Monday. So have an eye on that on our Telegram channel. Going to see you again very, very soon. Take care. Bye-bye. And always remember to take a stop.